Hi everyone, it's Andrew here, and what I'm looking for is a big winner, something that can return 50x or 100x, and I've been eyeing off a company now for at least 6 months, maybe longer. And I think I'm making this video to get a lot of my research out of my head and put it down somewhere where I don't forget, and maybe I can get some feedback. All right, so here goes, hopefully you enjoy. Now, I didn't understand this industry at first. I didn't understand the culture. But after watching a few documentaries and talking to some friends, including Andrew Latender, thanks mate for all the help with this, I now think I do see it. Medical cannabis is incredibly important. From cancer treatments to severe anxiety and insomnia treatments, the medical cannabis market is safe and recommended more and more in the medical world. The stigma around smoking a joint and frying your brain, I think, is now a bit far outdated. That isn't anywhere near what this market is about. Sure, the recreational market is for chilling out, but there isn't much harm with that anyway. It's the medical side I think is super important and can be life-saving for lots of people. The recreational market is just far, far bigger, so I guess why not try to serve both? So the company is Trulieve, as you've seen in the title and in the thumbnail. It's a medical cannabis business. They produce their own product and sell it in their physical stores. They have over 500 different products like edibles and flowers, vapes, and a wide and weird range of others. Now, they also just acquired another big company called Harvest Health, and that brings their total stores now up to, I think, 162 stores, with most of them, I think 112 of them in Florida. So Florida is the home state of the company, and they have a real stronghold here with about 50% market share. And now they are expanding across the US and currently in 11 states. Okay, there will be a lot to go into about the company, but I just move on for this video, and I'm going to now talk about some competitive advantages that I think Trulieve has. Now, licenses for medical marijuana in each state are tough. You have to show you know what you're doing, you have to have the financial backing, and a serious business with very structured processes. It is going to be extremely hard for startups to get a license, maybe near impossible. Plus, each state has its own weird rules, like how many stores are allowed in a certain geographic area. For example, in Arizona, there are only a set number of licenses and products cannot be sold more than 25 miles away from a licensed location. So there's a lot of hoops to try to jump through, so the barriers to entry are high. Now, on the flip side to this, the rules in the future could change. It might become the Wild West and laws relaxed and anyone can open up a shop or sell online. It's possible, but I can't imagine that happening because cannabis needs to be regulated for its quality and strength. Like the black market now, there are big ranges in quality and strength, and governments are going to need processes in place to protect the consumers. Also, Trulieve could lose their licenses. That would mean the investment in this company, I guess, could go to zero. And before I start going into the big ugly issue for this company, I just want to say you have to think this one through yourself. I'll give you what I know so far, but this is possibly one reason why the company is very cheap. There is a big elephant in the room on this investment, and that is Kim Rivers, the CEO. Well, her husband has been sentenced to jail on bribery charges. So here is the story from about midway through 2021.
Yeah, it's uncomfortable. So the deal is, Trulieve's CEO, Kim Rivers, her husband is a gentleman named J.T. Burnett, who's kind of a finance and real estate guy, kind of dipped his toes into a bunch of things in Tallahassee, Florida. And he and a city commissioner of Tallahassee, a guy named Scott Maddox, have been indicted, and their trial has just started only this week, I believe. For bribery and corruption, federal charges, which are extremely serious. These guys were busted in an undercover sting operation by the feds, and the evidence seems to be very strong for their collusion and their corruption and their alleged attempts to edge out some of Burnett's rivals. So these are the kinds of headlines you don't really want to see as a company investor. There was some sort of relationship between Burnett as an individual and Trulieve as a company. Trulieve, it's somewhat tenuous. Trulieve did buy property, and they bought equipment from a company, the name of which I don't have in front of me, but a company where Burnett was a minority owner. So it's not like they were meeting in a back alley somewhere and handing over bags of money or anything for favors. But these buys were kind of significant, and they sharply increased from $12 million in 2018, leapt to $46 million the following year, and in 2020 it was nearly 100 million in these purchases. So it doesn't look great. The company did admit it, but in their one of their regulatory filings, they said it didn't seem as if this put them in legal jeopardy. Rivers herself hasn't really been mentioned. I mean, she wasn't indicted. Apparently she wasn't even under investigation during the probe that resulted from the sting operation. So it doesn't seem as if the company is in legal jeopardy. Like most likely, Rivers is going to keep her job. There really hasn't been a lot of scuttlebutt that she'll step down or she'll be forced out. There doesn't seem to be any investor impetus for this. So it's not a good look for anybody here. I don't think Rivers is going to step down. I don't think Trulieve is necessarily touched by this. I think if either the company or its CEO was dirty, was somehow complicit, involved in any of this, they would be much more directly involved in trial, either as defendants or witnesses, or one way or another, they'd be more strongly identified and involved in it. So bottom line, I don't think Trulieve investors should worry about it. However, it is something to keep an eye on and be a little bit, cautious about.
Now, since that video, it has been announced that J.T. Burnett, a Florida businessman and a husband of Trulieve Cannabis CEO Kim Rivers, was sentenced to 3 years in federal prison and a $1.25 million fine for his conviction on bribery charges earlier in 2021. Okay, so this is the hair on this investment. It is hairy. It's very ugly. At first, I wanted to just drop this and move on. But then I thought about the legal issues that blue chip stamps went through back in the 70s with Charlie Munger and Warren Buffett heavily invested. See, with some legal issues comes opportunity. The stock wouldn't be beaten up without the fear that Trulieve is vulnerable. So I definitely know this isn't for everybody, and I think it's going to take a bit of guts to even just think about investing in this one. But when you do dig into it a little bit more, the company and Kim have been cleared of having any association with any bribery or corruption issues. It appears that it is separate from the company and Kim. But when I just think about the entire issue, a few things do come to mind. I'm going to be brutally honest here, and that is that, well, what does this say about Kim? That she is married to a criminal. Look, love is a real emotion, I get that, and people make mistakes, I get that as well. But if I knew that my partner was doing something immoral, I wouldn't want to be with them. It would go strongly against my principles. So if she knew this guy was doing something bad, well, that is not the strong leader that I want. Well, and then maybe she didn't even know about it. Well, then I think, well, what type of person doesn't know that her husband is a criminal? And that seems like a big oversight and something that's very important. What if something illegal is going on inside her company? Will she even know about it? Okay, so it is easy for me to sit here and judge, and I'm actually just going to try to look at the facts here. The facts are that Kim and the company have no issues at the moment in the case against her husband. It has been sentenced. It is done. Unless some new information comes up in the future, I don't see a reason we can't just move on. But maybe some new issue is dug up. I don't know. Will I be able to invest in the long term with this cloud hanging over the company? This is actually quite a good lesson in your reputation. It takes a lifetime to build a reputation, but just 5 minutes to destroy it. Kim didn't do anything wrong. So saying her reputation is damaged based on the actions of her husband is probably not fair. Kim must know all this, and I'm sure she thinks about this all the time. If I were in her shoes, I think I would be very sad about the situation, but I would think about the things that are in my control, and that is my business and moving forward. Now, in response to all this, the board of directors at Trulieve did write, we have consistently maintained that neither Trulieve nor our CEO are involved in the case. This is what Trulieve said in a Twitter post in response to the Burnett conviction. So this issue will probably dampen the stock price for a long time. And whether that is right or wrong, I don't know. If things just move on, then this could be a fantastic opportunity for investors who can look at the business for what it is. Now, Trulieve made a clear decision to focus almost exclusively on the Florida medical cannabis market first, building up processes and proof of concept in that market. To get 50% market share is an amazing achievement, but the best part is that they became profitable before they started expanding. See, pretty much every cannabis player in the US or Canada tried to expand rapidly all over the place and even internationally. It was considered a land grab. Only so many shops are allowed, so the first to move gets the prize. They were able to raise money through the hype of new cannabis industry from penny stock investors betting on any cannabis stock. And this money expanded operations all over, but no one was able to prove it profitably. Now, on the other side, well, Trulieve went the more measured and slow approach. By staying in Florida and dominating, they made sure they had nailed that market first. It actually reminds me a little of Walmart, but anyway, growth and profit is going together, and that is a very disciplined way to grow. It has given them the opportunity to now acquire one of these more loosely run operators in Harvest Health that were heavily in debt. They were diluting their shareholders at very high rates, and they weren't focused on any particular area. And what Trulieve got out of the deal were a lot more valuable licenses in new states. They can now tighten their operations of this old Harvest Health stores, which were making a lot of revenue, plus expand the Trulieve brand into these new markets like they did with the Florida approach. And just some anecdotal evidence is that the new store openings are packed with people. The demand is very strong and growing. We will see this later in the numbers. But there's still a lot of competition alive in this space, and it's not like Trulieve have any monopoly. Everyone is driving prices down to get people into their stores. It looks like a race to the bottom, but I think quality and the variety of products, just like beer or wine, is going to be more how this works. See, cheap beer and cheap wine still sells a lot, but so does the mid-tier and the high-end alcohol as well. And with cannabis, it's obvious that there will be these different levels. There's different tastes and varieties and quality, etc., that will make a full range of products. Look, cheap is fine, but just a short-term thing to get the foot traffic into stores. It's typical retail behavior, really. Okay, it is still federally illegal, and this could be a positive and a negative depending on how you look at it. See, the USA still sees cannabis as illegal, but many states have both recreational use and medical use legalized. Florida actually is only medically legal. Recreational use isn't legal yet. If Florida does legalize recreational use, well, Trulieve with their 50% market share are going to all of a sudden explode. And that's speculation. Maybe that doesn't happen. I don't know. So the question you will need to think about yourself is, what are the chances of marijuana to become legal across the USA? Now, my understanding is that there is actually a lot of political support for it from both sides because of a few key reasons. One, it will create a lot of jobs. Two, legalizing will actually reduce crime. And three, products can be regulated rather than having street products, and this protects the consumer. Also, the states that have legalized it are making a lot of money in tax revenue here. So states are going to see this as a piggy bank of sorts. And if they can open up to the cannabis industry, they're just going to make a lot of money. And I think government's going to need a lot of money. And a lot of state governments, even the federal government, well, they don't run the best budgets, so they're going to see the opportunity here to get some money coming in. So I think it actually makes a lot of sense. But I'm going to make a lot of my assumptions on this investment as upside potential rather than a fact. Now, debt is expensive in the space, but Trulieve can get access to the best debt because of their strong balance sheet and strong performance in Florida, and that being profitable. The interest rates are now in the high single digits, I think about 8%, which might sound crazy at first, but you have to remember most traditional banks can't lend money to the cannabis companies because it's still illegal at that federal level. Anyway, so there are a lot of upside catalysts with this investment. We've got more states opening up. We've got recreational use in Florida. If that becomes legal, maybe in 2025, this could 4x the business like overnight. You could get legalized at the federal level. There's better financing with all the banking services available with that legalization. You've got Now, normalized tax rates. Now, currently, they're paying huge tax rates because it is illegal at the federal level, but legal at the state level. So the tax stuff is really confusing, but it boils down to effective tax rates for Trulieve at the moment, well over 50%. And that is brutal. That's not like any of the other industries. So that coming down to I don't know, 25% like a normal company, well, that's a big win for the financial statements of Trulieve. Another catalyst is more consolidation, as the best, most diligent players eat up the poorly run, unprofitable businesses that have many stores and licenses. Then you have the potential of the New York Stock Exchange or the NASDAQ start listing these companies, and that'll open up institutional investment. There's no institutional money in the space because it is federally illegal. And I like that Trulieve is on the OTC at the moment. It is keeping those big boys away, and well, for now. Now, to invest on the OTC, you might need a broker like mine. Interactive Brokers is what I use, and there's a link in the description. So where this goes from here is anyone's guess. But I don't think I have come across an industry with such strong potential tailwinds. So that's 30% per annum industry growth rates are what's been projected towards 2028. And there are so many potential upside catalysts that can happen here too. It might be a wild ride, but the trend is going up and to the right very fast. Now you might be thinking this is all a bit positive and a bit hypey, but the stats are real, and after looking across the industry, Trulieve looks not just to be the best in the cannabis space, but it's a good bet compared to nearly anything else I can find in the entire market. But don't forget, it is cheap for a reason, and this has some hair on it. Now, Trulieve is in the best financial position out of all the cannabis companies. They are all growing fast, but not all of them have these great fundamentals. This will be a big advantage if Trulieve wants to make more acquisitions, which they do. Actually, it gives them a big advantage in so many ways. So here are some of the important financials. So they're currently sitting on net cash of $70 million. It's a four times current ratio. The debt to equity is just actually 0.41. They got very low accounts receivable, so that means they're not going to have to chase up money in the future. Their intangible assets are just 1/10 of their assets overall. They're consistently profitable, 4 years with net income per share growing at 100% per annum, in line with their revenue as well. And their cash from operations is growing at around 65%. Valuing this company isn't easy, but I can make a few assumptions based on the conditions right now. Oh, look, I'm only going to go out 5 years as it gets hard to accurately work out anything much past that. This might also be one of those stocks that you're going to have to keep an eye on. Not a set and forget stock, I don't think. So if I want to make some money here, there is no point investing unless it's really attractive. So I'm going to add this to my watch list. And if you want to follow that along, in the description, I have a link to my e-magazine that I publish on the first Wednesday of each month. It's $10 a month, and I hope I can provide a lot more value than $10. All right, the Trulieve valuation, let's do that now. All right, so I have combined the Harvest Health acquisition and combined the revenue and added the number of shares outstanding because of the increase in the shares outstanding from the deal. Now, I've also been able to combine the revenue numbers, and it's actually also what was reported. It's about $1 billion in combined revenue now between after the acquisition. Now, with growth rates for the next 5 years, well, the company has been growing at 100% per annum. And that is some fast growth with solid margins as well. And those gross margins are coming down as the market matures though. And not sure where that will stop. But I would think that being a vertically integrated company that makes the product they sell, they should have stronger margins than a pharmacy, and the pharmacies are at about 20%. So maybe 40% gross margins will be about the level in 5 years' time. Also, that 100% per annum growth will come down for sure. Trulieve even guided about 60 to 70% this year. Now remember, the industry is projected to grow at 30% per year. So that's organic growth. But then Trulieve is growing 10 to 30% extra stores a year, as well as just the states that they're in now. So I'm still not including any of those catalysts from earlier. So to say the average will be 35% growth for the next 5 years, I think is very conservative. Let's call it 25% to be insane. I'm essentially saying that the industry won't grow at 30% per annum, and Trulieve won't grow anywhere near as fast as they've grown in the past. Essentially, a rapid decline in growth is what this assumes. So it's like this year's 60%, then it's 40%, then it's 25%, then it's 20%, something like that. Now I'm actually looking at margins and I'm trying to think of when the business isn't in this growth mode. And the idea is to get a feel for how much free cash flow the company will be spitting out in the future. Now I'm using an average 10% free cash flow margin here because the EBITDA margins are more like 40%, but tax is a killer for Trulieve. So let's assume tax rules don't change. Normally you could halve the EBITDA margin, and that's a ballpark for free cash flow number, depending on the business, of course. But this is a bit different with those really high tax rates. Then I used a 20 times free cash flow multiple after 5 years because, well, the growth rate's declining and the industry might be in a similar situation as it is right now in the future. So let's just assume nothing really has changed. So that gives me a 5-year target market cap of what? $6 billion. And I'm also going to continue diluting the shares, and a little higher than they've actually been diluting them at 2%, which has been done historically. So I'm going to call that 3%. And I'm adding the current shares outstanding. Anyway, all inclusive of the Harvest deal, thinking about the current market cap as well. And it tells me that I've got a 5-year target price of $28.60, about a 6% IRR from here. Okay, let's be a little bit more fair. Okay, let me now put the revenue growth at 50%. Now that's assuming 2022 of about 60%, then 55%, then 50%, then 45%, then 40% over the next 5 years. So it's still slowly declining, just not declining at a rapid pace like I projected earlier. And that feels a little bit more reasonable to expect. Look, it's hard for companies to grow at super fast rates forever, so slowing it down feels okay. But rolling out stores has actually really good return on invested capital. So the cash flow coming in does compound, and Trulieve can then just roll out even more stores, a bit like Chipotle or Subway. Now let me add also a slightly better margin with the savings from their economies of scale. I'll even keep the 20 times multiple, which would be hard to think it would be this low for a company at these growth rates, but still, who knows? These are all just assumptions anyway. So now we're talking about possibly 40% IRR, and I'm really not including the catalysts from earlier. Those are still just extras. Now, those familiar with my channel, you can see that I'm using a different method for calculating value here, just because there are a lot of variables and I only wanted to look 5 years out, not 10 years out. It's just pretty rough anyway, and it won't play out exactly like this. I'm just trying to get a feel. If management mess things up, this could still be a terrible investment. Now, here are some other things to note about the company. The market cap is about $3.5 billion at the moment. They're in a stable industry for downturns. I think it's actually a good business in pretty much any economy. If it is really difficult in the economy, I think cannabis sales will actually stay strong, just like beer and wine sales stay strong in tough times. CEO has strong insider ownership at over 10%, and I like that Kim Rivers has alignment with the shareholders. Compared to her very low salary of just $1 million after all the incentives, and comparing that to well over $320 million in stock. So, and the CEO is a founder operator, and I really like founding CEOs. Okay, I put out a lot of information today. This is my attempt at a summary. So I think Trulieve is an interesting, high uncertainty, yet high upside potential investment. Yes, it could go to zero, but the chance of that I think is very low. Just not as low as some super stable companies like Berkshire Hathaway or Markel or something like that. But those investments are also not growing at 50% per annum either. What I really want out of this video is actually just some feedback. So if you have more things to add, please help me out here. And working together, it'll actually help us all. And thanks, Andrew Latender, again, mate, for your help so far on this. You're a legend. Thanks for everyone for staying to the end of the video, and I'll see you next time.